All right, welcome back to another Dogecoin technical analysis update on Crypto Down Under. Let's get straight into it. So, just like Bitcoin, Doge had a rising wedge that we were building on last week. Now, where's our Monday? There's Monday. Just want to frame it up. Tuesday, Wednesday, Thursday. Friday was really nice. We had a really nice rip on Friday. Saturday, Sunday was still... Doge still had the drama. Saturday, Sunday was corrective. We had this nice sell-off. Threw us back into the wedge and broke us down through it. So Monday obviously reflecting the correction that the stock market had and Bitcoin. So let's unpack where we're going and try to figure that out. So I think obviously we're in a downtrend on it. Taking the high point, let's have a look. Oh, it's already unlocked. Hang on a minute. Let me just lock that. Cool. Downtrend. Something like this. Oh, that didn't snap correctly. Fix that up. Something like this, right? We've got a low there. Okay. So there has to be some kind of Fibonacci thing going on right now. Well, there is on this time frame. This is the high of, what's this? 14 cents, 14 and a half. The 14 and a half cent high, we'll call that A, and we'll call the low of 8 cents B. Now, on fighting our way back up, we're struggling. We've picked up above it, but we're still struggling at the 0.5 Fibonacci level, Turbo's favorite. We've come back and we're using currently the 382 as some kind of point of support, maybe, which is lining up with this pivot here and that resistance here. So it's like a bit of an SR level now. But there's something going on with 10 and a half cents, basically. 10,465 if you want to get real specific. Right now, that is our support. I'm just looking at this action here. Let me delete or just hide this Fibonacci for a minute, because I want to do a different one. I want to do one from the low to the high and see if there's a support. And it looks like it might be a 0.5. No, it's a golden pocket. So it's a push down to the golden pocket, and we're getting support off the golden Fibonacci level of the 0.618. Excellent. That's reason to find support. I think that's good enough for now. That might be a reason for us to bounce here and pivot. So longs here. This is not financial advice, but let's hypothetically talk about a long opportunity. If you long here, you would want your stop loss to be somewhere just beyond the swing low. Now you got to be careful of what's called a swing fail. So let me clean up this a little bit. Let's say you did go long here and price came up, found resistance at let's say this low, this SR level. Let's say that provided resistance here. What you might get before going higher is a correction that takes you down to not only the previous low, but a little bit extra, a little bit beyond that, and that's called a swing fail pattern. So it's just enough to get people scared that the low is getting lower and that we're, the idea is that it gets people thinking we're heading down further, but it's just enough to fool people and perhaps stop people out and trick them into closing their long. And this is why when you put a stop loss below a previous swing low, you want to have it just a little bit beyond, and you might want to check the order book to see where the wall is, because there'll be a buy wall on the books somewhere, around here, right? So you want to have your stop loss beyond the wall, a little bit further than the wall if you can afford it. And if you can't afford it, it might be because your position's too big or your leverage is too high. So, keep everything framed up responsibly and a stop loss shouldn't be an issue for you. And if it is, something's wrong. Something like your leverage, your position size, something's wrong. If your stop loss is going to cause too much damage. So anyway, back to the point. You could face a swing fail before. We've seen these before, where it does go a little bit lower than that previous low, just to stop people out, liquidate people and whatnot, before marching on high, right? That happens all over the place. You can find it. Look, there's one over here. Let's see it. All I had to do was zoom out a couple of scrolls. And look, there's one here. See? So let's say people saw that the length of that wick is, that's buy pressure. Let's go long here. And let's set our stop at the previous low. And look at that push. It goes just low enough to stop out people that might have set their stop loss a little too tight to the previous low. So you want to set it beyond so that you don't get manipulated out of your position. That is what the swing fail is. And because look, that position was correct. It did go up eventually, didn't it? Not only that, it really, if you gave it time, if you gave it a week, it really came up. And that would have been a really nice long to take. I know B did a couple of trades recently where he went long on Doge and made some nice returns. So yeah, just look for these little clues and hints. Swing fails are quite common in crypto. You see them on the top side too. Like you've got a high here, and look at the swing fail that took out stop losses of the people that went short. People that went short through this area would have had their stops at or around that swing high, and this wick, this push up, was to get rid of those stops or to liquidate them or whatever before moving down. So that it wasn't that they were wrong, it's just that their tolerance for the sweep was too tight. You need to have it to where you can tolerate their manipulation. You need to be able to ride the storm. You need to ride the wave. Yeah, I don't know, like it's a pretty common pitfall that when you're using high leverage, you don't have any tolerance. You can't endure any drawdown or any manipulation against you. So you're out. As soon as it goes wrong, you're out. And that's what stops a lot of people from taking positions or keeping their position, which was correct at the end of it. After the manipulation happens, they were right. So maybe one thing you can do is wait for that manipulation move to come in, like a swing fail pattern, and then go long, rather than preemptively longing. You know what I mean? So instead of longing here and trying to ride up because you foresee all of this, let's say you've got a crystal ball, this is the play to stop you out. So wait for that play. Wait for the trick. Wait for them to play their nasty trick and then go long. Then you've tricked them. So, flip it in your favor. Easier said than done. It's not easy. Is this a swing fail? It could be. Let's say you went long here off this higher low and went up, and you're expecting, at some point Doge to go beyond 12 cents or something. Your stop loss may be somewhere in this cluster of lows here. And this, where we came down and bounced, that was the liquidity grab or the sweep below that low. Because look, let me delete these lines, these Fibonacci's, just to make it even clearer for you. And I'll even move this out of the way a little bit. Look, these lows got swept, got swing failed. You can see it right there. So is that permission to go long? Maybe. I'm not saying yes or no. Like, that's the thing. Technical analysis doesn't give you guarantees. It gives you varying degrees of probability. So that's all you ever get. You can never get a silver bullet. There is no silver bullet in trading or analysis. It's all educated guesses, basically. Or, you see the rhythm of markets and you see where the traps are, where the tricks are, and you try to get ahead of the trick or wait for the trick to play out and then trade it. You know what I mean? So anyway, that's enough. That's enough for Dogecoin. I think this video's gone on probably too long, 10 minutes. So yeah, it's in a downtrend. There's trend lines, obviously. I won't go too deep into that because the video is getting a bit long, but yeah, we do have trend lines that we need to be paying attention to. Something like, you know, maybe there's a falling wedge here, you know. You line it up with these, yeah, it looks almost like, sort of like a falling wedge, which is bullish. So there's gonna be a low at some point where it pivots, and I think a breakout is on the cards. Like, and that's not rocket science. That's nothing special to say about that. And I'll show you why anyone can make that prediction. And that's because markets do this. Markets have peaks and valleys. Markets have peaks and valleys. When it goes down, what's next? It goes up. When it goes up, what's next? It goes down. You know, it's that simple. That's how simple it can be. That's all, you know. So what did we do? Last week, we went up. What have we been doing the last 3 days? We've been going down. So what's next? Probably a bounce at some point. I don't know when that's going to be, but that's, you know, you can break it down that simply. Look, market went up, market went down, market went up, market went down. What's next? Market go up. Can it go down, down, down? Yeah, of course it can. But yeah, anyway, I'm rambling now, so I'll wrap this one up. Thanks, guys, for tuning in to another Dogecoin technical analysis update in Crypto Down Under. Hit the like and subscribe, leave a comment if you want, and I'll see you on the next one.